Hi, Barrett. Thank you so much for coming on to Under the Paycheck. I have Barrett Young, CPA and partner of GW CPA.
Thank you so much for having me, Amy. I'm looking forward to the conversation.
You are a certified public accountant. Take me back to why you decided to become this and how you even started finding your own clients.
Yeah, sure. So I've been in the profession for 20 years. I got out of the Marine Corps in 2006 and started working part-time at a CPA firm during tax season, actually. I had never even filed my own tax return at that point when I started working there, but I was majoring in accounting because I knew I didn't want to do a career in the Marines. Started working there at that firm, and 20 tax seasons later, here I am. Let's see, started there in 2006, became a CPA in 2010, so 4 years later, and then had my own firm for a little bit there for about 5 or 6 years, and then joined up with my partner here at her firm in 2017. So I've been here for the 9 years now. And I'm a partner with one other CPA, and we run a team of 13 in Maryland.
That's a lot of people. So it's a slow, you go in, you do like the normal job, you go in as an employee, and then you go and through the ranks, promotions, maybe more hours of schooling, actually getting certified, because I believe there's a difference between public accountant and then certified public accountants.
Correct.
And then you can like specialize in things, and then that takes more hours. So in theory, this could take a good 5 to 10 years to get to the position that you're in.
Yeah, so certified public accountant is a license. It's a state license. And so most of the states have like a 5-year requirement or 150 credit hours. A lot of the states are changing it back to a bachelor's degree and to be able to sit for that exam. But then it's a 4-part exam on all of the fundamentals of accounting. And then we also have a work experience requirement. So like I said, that took 4 years to get to that point. I already had the 150 credit hours when I got into the profession. Partner, for a lot of smaller firms, that's probably like a 7 to 10 year journey to become a partner. Now, certainly in 2012, I went out and started my own company, and you can be a partner immediately if you start your own company.
Yeah.
But yeah, so in the profession, we talk about the big four, and those are the big four international accounting firms. They do a lot of marketing, a lot of recruiting at colleges. And so a lot of the profession goes into that. That was never for me. My first firm that I started at in 2006, there were 9 on the team there. So I have always loved the small firm. I've always loved how it involves me in every aspect of a client's accounting and tax work. That's primarily my role as tax partner. That was part of my journey, is finding out that I love the tax side of what being a public accountant means, because it can mean accounting, it can mean auditing and financial statements, it can mean tax and consulting, all sorts of different things you can do with that role. But yeah, that was part of that journey, is figuring out where I wanted to fit within the profession as well.
Now, I don't think this is true at all, but I could see where people get like their fears. For example, when I think of a certified public accountant, I think of taxes.
Sure.
So then I start thinking of, I believe it's called H&R Block. I start thinking of Intuit.
TurboTax,
I think maybe that's what they're
Intuit,
called.
yeah. Yep.
There's something like that.
Yep.
Same goes for me. I'm in the furniture business, so you can automatically think of like Living Spaces and Ashley's Furniture and Bob's Furniture and all these other places. What gives you like the confidence that you're going to get clientele instead of somebody going to H&R Block?
Mm-hmm.
For me, I think regardless, there's always good. It doesn't matter if there's somebody else out there. There's still people who prefer the smaller connections, the more timely, because if you call up like H&R Block, they might not get back to you, or you go do your taxes and then you'll never hear from them again.
Yeah.
So is it the same kind of thing for you, or is there a bit of nerve that, with AI and tech and all of that, that eventually this could go in the other direction? You know what I mean?
Yeah, sure. I mean, that's a great conversation. That's something I think about on the regular, especially with a team of 13 people. And, when I started my profession, I would have said H&R Block was like my competition. TurboTax was our competition 20 years ago. Our firm and a lot of the CPAs that I talk to have moved up in the value that we provide to clients. And so most CPA firms, unless they're very old school, very traditional CPA firms, are not sitting across from a single taxpayer or married family and preparing their tax return in front of them. So we actually have just over the past couple of years offloaded or moved away from doing individual tax prep that's not related to business owner clients. And so we only work exclusively with tax returns that are involved in businesses. Most small businesses in the US are what's called a pass-through business, which means you report the income at the business level, but the income actually passes through to the owners of the business and gets paid on their individual tax return. So much more complicated. A lot of the weekend shops, drop in, get your tax return in that 1 hour appointment. They don't even handle that type of income. And, we're talking at a higher level, a higher factor of complexity and preparation fees for the type of work that we do.
In preparation for this, I saw that you guys focus on families passing down businesses. Excuse me. I believe the term is called succession
Planning. Yep.
Succession planning. I personally don't know any friends or family that their parents have businesses or anything. None of us, I would say, got lucky, because when I think of a family business, I think that's kind of sweet and kind of grounding in a way, because you have something to go back to. You have something that's there, that's been planted, that's grown. You're not, even if you go out and try something else and it fails, okay, great, this is here. It's something that the family has built, something that's been going on for generations.
Mm-hmm.
But why does it sound like it's so difficult to pass on if there has to be there has to be a company involved like you guys?
So why would you need advisors to make that happen and not just say the company's yours now? Is that what you're getting at?
Kind of, yeah, because with no experience in this, I feel like if my mom had a business and then she passed away, I'd be like, cool, I picked this right up, like a piece of paper. But obviously nothing is ever that simple.
Not when the government's involved. So there's a couple different things there. So what you're talking about would be inheriting a business. And so that is succession planning that occurs after somebody passes. Now, there are reporting requirements required for that. Like, a business is a legal entity. And so when somebody dies, you might split the stock, split the ownership of that company with siblings. There are other people that might be now joint owners in that business with you. And so the business... Partners, yeah. And so without any planning within a family business, mom and dad run the company. Dad's been working in it his entire life. They pass. The business now goes to 3 or 4 kids. One of them may have been working in the business and the other 3 weren't. So now you have 25% of the ownership of that company in the hands of the actual kid that's working in the business, operating the business, and 75% or control of the company in 3 uninterested, uninvolved siblings. So that's one of the cases where you don't do anything and it passes through inheritance. We try to do active succession planning for situations like that, where we want to make sure there's equity, because you and your 3 siblings, for example, are each legally going to receive 25% of mom and dad's estate when they pass. So we want to make sure that it's not unfairly weighted towards the one kid that's working in the business, where the business might be a lot of the value of the company versus, cash or property or anything that might go to the other kids. So there's a whole lot of things there. There's state level estate taxes. There's federal level estate taxes. All of that kind of goes into figuring out how much of this is going to pass without taxes being involved, and how much of it you have to pay estate taxes on the passing of the previous generation. That's assuming that the kid in that family business even wants to take over that business. And so that's really what we're encountering a lot with our clients is the next generation is not working in the business. The next generation is not interested in the business. And so we're doing a lot of succession planning where the next generation might be a key employee. The next generation might be an outside roll-up or an acquisition at a mid-level company that's kind of buying a bunch of these to consolidate them and to pay out value to the person that built that company so that they're able to retire. So that's very high-level summary what's involved in succession planning. But for a lot of people's family businesses, you've worked in this company for 30, 40 years. When you get to the end of it, just closing it down is kind of a shame to see that it, provided for you your entire life. But if you weren't also saving up for retirement and you get to 65 or 70 years old, and now you've been running a company for 40 years and now you have no savings that's going to provide for you for the next 20 to 30 years of your life, you're now living off of Social Security, or have to go get a part-time job because there was no value in that business that somebody wanted to buy when it was time for you to retire. Does that
Oh
make
my
any
God, how do
sense?
you calculate Yes, of course. How do you calculate value though?
Yeah.
'Cause
So
I'm just kind of thinking like that's maybe inventory, like maybe the inventory is value or the service, but
yeah, so that's
maybe
one way.
not.
That's like the asset method of value calculation. And so I'm also a certified value analyst, and working in succession planning, this is actually a large piece of, the conversations that we have. So if you're a building, value is appraised value of that building. So that's kind of easy to see. Inventory, similar thing.
Okay.
If you've got $5 million in inventory within your store, it's very easy to see that's the value. The hard part of calculating value is actually what's called intangible value. That's the stuff you can't see. And that's name brand, that's recognition, that's repeat customers. That's how much of the business actually is going to exist after you, as the owner, walk away from the business, retire from the business. And if you have built a business where a lot of those clients are going to keep coming back and you're going to handle the succession and say, hey, this is Joe. She's going to take over the business after I retire. You can trust Joe. She's going to do a great job, take care of you. Then that business has value. That's called intangible value. But if I retire and I'm like, I've not done anything, all of my relationships are held closely with my clients. They don't know anybody else who works here. There's really nothing here that's going to be retained after I retire tomorrow. Then that business doesn't have intangible value. And so in
Oh
those
my
cases, you
goodness.
do end up selling that client list for a fraction of what it would have been had you had any goodwill in the business, because a mid-level company will just buy the client list and say, we now offer you, come over here, get your tax prep, get your services, but they're not really going to pay that owner for that value because that owner didn't build any value in the company.
See, okay, this is getting interesting. If we're all told that nobody's ever told to like make a business.
Mm.
My dad was also a Marine. The number one thing he told me to do is go to college.
Yep.
That's what I did. I went to college. You go to college, you get a career, you work for someone else. Hardly do I ever hear anybody tell their children like you need to go start a business.
Yeah.
And I don't think starting businesses are that difficult. It is difficult at first because you're doing the 20 things.
Mm-hmm.
You're the marketer, you're the administrator, you're the logistics, you're all of it. But oh my gosh, but
Why would anybody pay for that?
no.
Okay.
And when you are having a business, what is the difference between like the business or a hobby? Because say they're both making, let's say 80K,
Mm-hmm.
but the hobby side, I don't have real estate. I don't have a storefront. I don't, because we're going more towards like e-commerce and stuff, right?
Sure.
So if you don't have real estate, you don't have a ton of employees, you have a good name,
Mm-hmm.
you have a good sales history, you have inventory, but you don't hold on to the inventory. Is that still even a business?
Is it a business somebody would pay you for? That's debatable. And so really, I mean, I've seen businesses that have transferred I have a podcast. I interview people who've bought their businesses. I had a pair of chiropractors on my show. They bought a business for $10,000. So that's a very small purchase. You wouldn't get somebody like me involved in a purchase like that. It's just, do you want to buy this business? In that case, it was equipment and it was a client list. And if the value of buying it from somebody else on the exit makes more sense than the time that it would take you to get up to that level, up to that speed on your own, then it might make sense to buy a client list. It might make sense if you've got an $8,000 e-commerce storefront and you've got a mailing list, you've got a structure for how you price those goods, how you list those goods, you've got inventory, you've got pictures of all your inventory, you've got you've got vendor relationships where you actually source the inventory that you're purchasing, it might make sense to buy that $80,000 business. When we talk about the multiple on that $80,000, usually we're going to be talking about, is that $80,000 worth less than or more than 1 year's revenue or 1 year's income from that business? And so that's where value really comes in, is if for me to replace that $80,000 would only take me, a couple months of work, then you're probably going to get a low multiple for that. You're probably going to end up paying, getting maybe $8,000 for that $80,000 business. If the relationships that you have in that $80,000 business are so key, so hard to replace, you could end up getting 3 or 4 times revenue for a business. In some cases, somebody might buy it from you for $250,000 or $300,000.
See, because I don't know if people think about this when they're starting their business.
Sure.
I know I haven't thought about this when I first started furniture. There's no brick and mortar. There's no anything. It's all online, and it's all contracts, and it's all vendor based and contracts with those vendors, and basically a bunch of paperwork, and then just marketing.
Yep.
But in turn now, and thankfully, I think I have at least another good 20 years before I have to retire.
Mm-hmm.
But this is something to look at, because I think brick and mortar is going to be either a lot more expensive. I'm in LA. A brick and mortar here
Impossible.
is like $5 million.
Yeah, right.
Not possible.
Yeah.
But you also have hundreds and thousands of people here that aren't going to have access to that brick and mortar also. So that's generations possibly that are not going to get into business in that direction,
Mm-hmm.
and try to find other directions, which I believe is like the e-commerce, all online stuff,
Yeah.
or like I hate it, but I think everything's just going to go towards like subscriptions. I saw even some like CPA accountants when I was doing research for this. A lot of them don't bill anymore, and they do like a subscription base for.
That's how we've moved our firm. Yeah.
Oh, see, it's just the way it's going to go. So I'm just curious, like, I didn't think about this. Like, how am I going to exit? And I don't know the answers to it, but like, how would people, is there a way to even prepare for an exit, or is it just kind of related to what your business is, and only certain businesses are going to be able to be sellable while others are just, while you're interested in it?
Yeah. So, I mean, like I said, you can sell your business for anything. So, I mean, I've heard people that are like, I bought a client list for $500. Think of like buying a mailing list so that you can distribute flyers to neighborhoods or something like that. You're buying an asset from that business. It's going to be, fraction of the value that you're going to receive. If you send out postcards to 5,000 people and 5 of them hit, it might be worth it to do that. Can you build an asset right now, even with your furniture business, something that you're going to sell for 20 years from now? Absolutely, you can. It's going to depend on you as an owner, how much of that business you want to grow beyond yourself. And it's going to depend on how much you need that business to provide for you after you retire from it. So right now, for the next 20 years, if that business is providing enough for you to be able to put away towards retirement, and you get to retirement and you've got enough to live off of, you might not need to sell that business. But the work we do, can you prepare for selling a business? Absolutely, you can. And that's what we really encourage our clients to do. Even if retirement is 20 or 25 years away, we say that what makes a business attractive in an acquisition makes a business more livable today as the operator of that business. Because where does value come from in a business in an acquisition? It comes from removing you from everything central to that business so that it can continue to make money when you take a vacation, and continue to make money over the weekends, and you're not having clients blow you up over all of their questions. You can step away from that business and the business continues to make money. That's what makes it valuable in an acquisition. That's what I would want to buy is there actually going to be revenue here after you walk away from the company? And that also makes it more livable, more enjoyable for you as the operator over the next 20 to 25 years. So for your example, building furniture, you've got plans, you've got a method, you've got certain types of wood that you enjoy, you've got clients or customers that know they enjoy your pieces of furniture, and so they continue to come back to you and they're like, No, you make good quality furniture. We enjoy the quality. We enjoy the style, whatever it might be. You've got a client list there. You've got a style. You've got a method that is unique to you. And the more focus you put into making that something that can transfer to the next person so that they can pick right up where Amy left off, there's going to be value there in that acquisition, because you're saving somebody at that point 20 years of doing it and searching in order to just buy it from you. But even if you didn't wait 20 years from now, you're saving somebody. How long you been running a furniture business?
It has taken me 5 years
Yeah,
to get to this point,
and
and I'm not even done.
yeah, and you've made mistakes along those 5 years, right?
Oh my goodness.
Yeah, so somebody buys from you the lessons that you've learned and what you've already got established. Stay away from these tools, buy these more quality tools, different things like that. There's value there. And so if you can save somebody from 2 years of wandering in the dark, what's 2 years of lost revenue, 2 years of no revenue? What's that worth to me to go buy a business that already has solved a lot of those problems for me?
You wouldn't think so, but the furniture world has a lot of drama. I could save you so much drama.
Yeah, every profession has got plenty of drama. And if you've been navigating it for 5 years, you've gained something there that somebody else is going to want to buy. Even if you package that up in a class, right? Which a lot of small businesses will do. They'll like, buy my class. Here's how you can learn the lessons that I've learned the hard way. I'm going to simplify it for you. In effect, that's you selling your system, you selling your method for a small fraction of what you make in revenue, but selling a business isn't that much different. I've got a business that produces $300,000 worth of revenue. I've already solved all of these problems. I've already got all of these relationships. Somebody else can step into this and pick up, and their revenue next year will be $300,000 because I've made it so that it doesn't drop off when I walk out the door. Somebody's going to be like, absolutely, I'll pay you $400,000, $450,000 for a business that's going to produce $300,000 in revenue. Not usually that high of a value on top line revenue. More often than not, they're going to be looking, especially at the smaller level, for bottom line net income. What's that $300,000 revenue turn into after all of your expenses? And that's where your multiple is going to come from. So if $300,000 is, making $90,000 a year for you to live off of, somebody might pay you $150,000, $180,000. If I can pay it off within less than 3 years, 3 to 5 years, it's probably going to be worth it to do it that way rather than start it from scratch. Does it make sense?
That sounds amazing. The part of you having to leave and your business still functioning and surviving because of all the systems that you've put into place, I do think that's a little bit difficult because for example, I still need to 100% be here.
Sure.
In order for it to work. Now, I am working towards, getting to those next steps, but I would imagine as if I were to start as a public accountant, I have to go out and find my client. I have to go and be there in person to fill out their taxes, because I know a lot of people still do them in person, but you reached a point where you don't do it. But at the very, very beginning, if you're not there for the person, you're not getting paid. And then now that person's going to come next year because they liked how you did their taxes the year prior. And now they told their aunt or their friend or their neighbor. So now you have a couple more. But now, snap. Now I can't leave. I have all these people to attend to. So maybe you go and hire a second person to help you with these things. When does it get to the point where you make all these decisions instead of, is this a liability or is this something that's going to help the business? Opening up an office space. You could do a lot of clientele at home over Zoom, things like that. But now you go and open up an office space for, say, $2,000 a month. Now you need to pay that $2,000. So now you need to have enough clientele and more work coming in to cover that. But essentially you're growing, but sometimes it's not good to grow.
Yeah.
So when did you decide that it was appropriate, that it would make sense? It might be a hard question.
No, for me, it's an easy question because that's the question that led to me joining up this firm 9 years ago. So what you're talking about is effectively, do you want to be a lifestyle business or do you want to be a lifestyle or do you want to run a company? And when I started my company in 2012, for those 5.5 years that I was running that, I effectively decided I wanted to be a lifestyle business. I was making enough money to provide for my family. I was working from home. I had all my clients. I was working remotely, and I didn't have employees. But for me, that wasn't what I enjoyed. I didn't feel like I was growing as a business owner. I didn't feel like I was growing as a CPA. I didn't feel like anybody was going to point to me and say, I'm in this profession because Barrett inspired me to become a CPA. And so I closed that down and I came and joined here. Now, this company already had we've always been around 15 people in the 10 years that I've been here. So this company already had systems. It already had employees. It already had a lot of that structure in place, location, client list, everything like that. I took over an exiting CPA's client list when I came on here. You have to make that decision as a business owner, and that's a hard decision to make. And sometimes that'll change depending on how bad you're getting beat up by customers or team members. You might just say, it's not worth it. I want to go back to, being a lifestyle business or shrink the company. I will say, you're asking questions about CPA succession, and that's very different than the succession that we deal with our clients. I mean, we're dealing with clients that are, running $5 to $50 million companies, top line revenue. And so it's not it generally does make a good business sense. It's not something that kid is going to go out and start tomorrow. Sure, they probably could, but they're going to have a long uphill road to get it back to the level that mom and dad had it at. With CPA firms, with professional services, you're talking about relationship businesses. A lot of that is going to be a lot harder to transition. And the value reflects that because I've worked with this CPA for 45 years and I trust them with everything. I mean, they've been invited to my kid's wedding. They've been invited to, my spouse's funeral. How do I transfer that to somebody else? It usually takes a little bit longer. And the way that we handle that is you're going to be introduced to the replacement that's going to be working with you 3 to 4 years before that CPA retires. You're going to have already been involved with them. When I work on a client, I'm not just working on a client by myself anymore. I've got a team that's working on it. I've got a team that actually handles most of the communication and interaction with that client. So they know they're not just working with Barrett here. And that's been one of the challenges as we've transformed this firm over the past couple of years, is getting people out of that mindset of Joe is my CPA. I've only ever worked with Joe. I have no idea who anybody else is at GW CPAs. My partner and I have been working hard on that for her for 30 plus years and me for 10 to build value in this firm outside of just the client list of retiring partners.
Did you essentially have to buy your way in?
Yep.
Like, you're getting all the contracts okay.
Yep. That was part of that
That's
decision.
smart.
I was here as an employee. When I came back on, I was here as an employee for about 3 years before I started to buy in as a partner.
Okay. That's smart because what you're mentioning in like such a much, much, much lower level, but maybe someone can relate to this. My mechanic around the corner, old. And now the new guy, I took my car and I was like, oh, I don't know if I trust you.
Yeah.
Because it wasn't my little old man mechanic. My little old man, he was just such a cute little old man. He's very, very tiny.
Yeah.
He wasn't there anymore. But nothing changed. The business itself didn't change. The location was there. It all looked the same, but he wasn't there.
Yeah.
It made such a difference. I don't know why, but I think that's just like the psychology for people and their businesses. Like if I were to leave or if you were to leave, well, you've structured it in a way to where if you leave, you're probably fine. But if I were to leave, my company's probably dead.
Working on it.
So working on it.
Your mechanic could have smoothed out that transition by introducing you to the replacement in advance. And so a lot of succession planning has what's called like an earn out or a retention period where the previous owner will stick around for 6 months to a year, 2 years after the transition to help smooth that out. Ideally, that would happen before the acquisition. So he should have brought in his replacement, a year and a half, 2, 3 years ahead of the transition, introduced him to all of his clients, said, this is Amy. Amy's car has this problem, or, and you have a system.
Always leaking.
It's always leaking. You have a system at that mechanic that you go to that mechanic because you like their system, you like their approach, you like how they explain things to you or how quick they are or the pricing or just the location. All of those things are factors that cause you to be a repeat customer of that business. But anytime you have an acquisition and you're the new owner coming in, you've got 1, 2, maybe 3 at the most chances to prove that you're just as good or almost as good as the previous guy, or they'll just leave. And that's what complicates succession a lot is everybody's willing to give you the benefit of a doubt based off of this person's word that you're the right person to take over that company. But if you drop the ball on that, that word is going to spread very quickly and people are going to move on.
See, that's stressful. So that's why I don't know if I could ever go and buy a business. It sounds great. Somebody else does all the legwork, but then what if that clientele doesn't like me?
Yeah.
And then you just did that whole investment.
Yeah.
Sounds risky.
And there's good ways and there's bad ways of doing it. And, that's some of the reasons why in bigger deals like we're dealing with, they're working with advisors that have walked through this. Because think about buying a house. I heard from previous shows, you tried your hands at being a real estate agent. When you work with a real estate agent, they do this multiple times a year. You've never sold a house before. So are you going to try this with having never sold a house before? Are you going to work with somebody that's done 6 of these this month? That's kind of our role.
Yeah.
Is we are involved with 3 or 4 businesses in a given year that are transitioning into new ownership. Whereas you, family business that's only ever, worked in this business for 30 years, you've never gone through this before, but we can help walk you through that.
That makes sense. And that's why I probably never, ever sold a house. And that's okay. That I gave up. That is okay. It's not meant for me.
It's not meant for you. Yeah. I mean, I tried to be an auditor and I'm not a good auditor.
But
That's part of figuring out what you enjoy. Yeah, right. All of that stuff is the history that brings you to where you are today and makes you who you are. So it's all learning experiences.
For my final question, I did do a little bit of research and I read a study that there's actually a shortage of CPAs right now, that there's less and less people taking these exams. I think the last study though was like in 2022.
Mm-hmm.
I couldn't find anything like sooner. And please, I do not expect you to like have any exact numbers either. Do you feel like there's plenty of work to go around? There's a shortage, or should people be going into this profession right now because there is a shortage? Like there is an opportunity here that people just aren't looking into.
Yeah. I mean, there's a number of aspects at play here. Baby boomers are retiring. I think even in succession planning, they say something like 60% of business owners plan on selling their business within the next 5 years. They're looking to retire. Baby boomers were a huge generation. They're still in the workforce and they're still exiting. Thousands per day are getting out of the workforce. Technology, we talked about AI just briefly. There's always the threat of, well, nobody's going to need a CPA anymore because AI is going to be able to do tax returns. I've been hearing that for 20 years, that technology is going to replace what we do. We use AI. We love AI here at GW, and I teach my entire team how to use it because my thesis on this is that the CPA that's using AI is going to be better positioned than the CPA that's not using AI. And so I want my team to know what it does well and know what it doesn't do well so that we can supplement that. I think it's a fantastic time to be in this profession. I'm biased. I love my profession. I've been involved at the state board level. We have conversations every month on the pipeline issue, which is what you probably read about. There's not enough CPAs. There's not enough accounting students coming in to replace the ones that are retiring. But this is a great profession to spend your career and spend long-term in. If you can make it past 3 to 5 years and decide this is really what you want to do when you grow up, it's going to be a good place for you. You shouldn't be competing with the TurboTaxes and the H&R Blocks of the world. There's plenty of value. There's plenty of work up the chain as you go. But yeah, I would say this is a great time to become an accountant.
See, I think maybe a lot of people think accounting is just like numbers based. I thought that too. It's like just constantly numbers. But I think it's a little more problem solving where, like, when I go to my tax person, it's not necessarily numbers. It's figuring out, okay, what deduction can I pull from here? What can we save for like over this? And you're like problem solving more than like adding. You know what I mean? You're not necessarily going 50,000 minus the deductions of 20,000. Okay. No, it's more we're going to apply this law, we're going to apply this formula. Hardly ever do I ever see like just numbers. I
Yeah.
think it's more of like a people relationship of don't worry, it's going to be okay.
Yeah, for
Don't
sure.
panic.
It is. I mean, it's the joke of all the people that get in, like myself, all the people who got into accounting because they enjoyed math. It's like, this is fifth grade level math at most. Fifth grade level math and maybe some statistics or percentages. It's not that. And it's even, you talk about the law or the interpretation or finding the best deductions. AI is going to be able to do that better. What you hit at there, though, is the relationship side, the people side. So let's talk about, I'm going to go off on like sports and stuff like that. You've got strength coaches, you've got running coaches, you have apps that'll design a running plan for you or apps that'll design a lifting plan for you. But they're not going to be the ones that are contacting you and checking up on you and saying, did you go to the gym today? Did you get your run in today? For 80% of runners, they don't need that. They're just going to take the app and run with it. But for the people that want a higher level of performance, a higher level of accountability, a person that is checking in on them and cares about them, the empathy that you can't get from AI, and just the accountability of like, you said you were going to do this. Does this matter to you? And that's what we provide to our business owner clients, is not just like the knowledge, the consulting around the best path forward. It's the holding them to that, holding them to their commitments, checking in on them and letting them know, I'm a fellow business owner. I'm on your side and we're going to get through this together. And I think that that's the part that's not going to be replaced by AI.
See, if I were to go with AI and like file my taxes and everything, sure, I'll get the answers. But then if something goes wrong, I did that. But if my tax person, if my team, if my accountant, I have a whole team there. If something goes wrong, we're all going to go and face the IRS or face this person or face whoever else.
I've put my
I'm not alone in
reputation,
it.
my signature, my certification at the state board level on every tax return that I sign. I do 300 times more tax returns in a year than you do. So it's going to be a less likely chance that it's going to be wrong. But if it is wrong, I'm also going to stand behind my work and I'm going to make it right. And I'm going to be working to fight the IRS in many cases where they're wrong and I'm right. And I need to prove to them that I'm right and they're reading it wrong. So all of that goes into being the human side of it. And for a lot of people, that's why they still come to a CPA or a enrolled agent or an H&R Block even. Think of TurboTax. TurboTax, was do it yourself for so long, but now they're like, finish your return and then call a TurboTax expert and have them review it and sign off on it. And now they've even got in-person branches that you can go to. And it's like tax preparation in person. What a concept that this software company thinks is so revolutionary. But people want to sleep at night knowing I didn't sign off on that tax return. My preparer did.
I'm hoping that somebody watching this, I understand it feels good to save money. I understand that, sometimes you're in a pinch, but there is value there of having somebody behind you being like, no, we did our best. And this is our track record of doing our best. Even if we did make a mistake, okay, people make a mistake. But if you do it alone and you make a mistake, it's a little harder to be like, oh, you did everything you could to not make that mistake while having that team behind you.
Yeah.
I think it's definitely good value for anyone listening, hopefully.
I think everybody's going to put their value what matters to them. And so for some people, doing it themselves, doing all the investigation, that's what matters to them. And they like sleeping well at night knowing that they know how tax law works. For other people, getting it done as fast as possible is what matters. For other people, getting it done as cheap as possible is what matters. That's why I will never be on the side of anybody that says you must have a CPA that prepares your tax return. I don't want clients that have to come to me because they're required to. I want clients that come to me because the value that they feel I provide is better than the value that they receive somewhere else. And I'd love that we have that option.
Yes, that's true. That's true. I agree with you. Well, Barrett, thank you so much for coming on. Of course, I will have everything linked in the description. Is there anywhere that you want people to specifically find you?
Yeah, so find me on LinkedIn, Barrett Young on LinkedIn. I also run a podcast, like I said, the Art of Succession podcast. twice a month, I have business owners on there who purchased their company from somebody else, and we walk through all of the lessons learned and the mistakes made so that hopefully we save other people from making some of those same mistakes.
So thank you so much for coming on.
Thank you for having me, Amy.